Good morning, everyone. I'm Stuart Fowler. I'm the project manager for Intraflex. Just for everybody's reference, we will be recording this session for sharing afterwards. I'll just very quickly run through the agenda for today. I'll cover off some general housekeeping in a moment. I'll then hand over to Roger Hay, who will do a welcome from WPD and really try and set the scene for Intraflex for you. Then myself and the rest of the project team will do a cover off all of the project overview, the trials that we undertook, and cover off a little bit about the Nodes platform. We're then going to hear from two of the service providers, facility service providers, just to give you some reflections on the experience of Intraflex, and I hope you'll all find that insightful. We're then going to have a panel session, which Roger will chair, and then I'll finish off with a summary of the project and what we're thinking in terms of what's next. So in terms of, if you go to the next slides, David. So in terms of the webinar, so if you can just keep your cameras and mics off for now. If you have a question, please use the chat function. And then Anna, behind the scenes, will just administer the questions for us. There will be a
guys, I can't do it. I'm now in a session with 250 people.
Gary, you're not on mute. So there'll be a separate set of instructions for the panel, but I'll run through those nearer the time. And there will be a series of 4 poll questions, and we'd really appreciate your thoughts and inputs on those polls. So if you go to this, the first poll, David. So you can launch that. So first one is what would be your role? So where have you come from today? So if you just all give us your answer. I just need to. We'll just give it a couple more seconds. Excellent. If you end it, David. We've got a great spread, looks like there. Brilliant. Thank you for that. And so now what I'll do, so I can close the poll, David. I can still see it. It might be my PC. Yes. So if I just hand over now to Roger. Thanks, Roger.
Just trying to get myself off mute. I think I've managed now. Can you hear me? Give me a wave, Stuart. You assume you can hear, or one of you? Yeah, good, brilliant. Thanks, Stuart. Yeah, good morning. Yes, I'm doing the welcome from WPD. So welcome from Western Power Distribution to today's Intraflex Dissemination event. My name's Roger Hay. I'm Electricity System Manager for WPD. So that encompasses innovation and digitalisation, some of our smart and flexible systems, as well as sort of connections and policies around how we build and design the grids. And it couldn't be a more exciting time to be covering all these functions. It couldn't be a more exciting time, fulfilling time to work in the electricity industry as well. I'll be doing this intro. I'll also be doing my best to host the panel session, which comes along later today. Most of you will know who Western Power Distribution are. We're the largest of the distribution network operators, covering the southwest of England, South Wales, and the West and East Midlands. And we've been passionate and have seen the potential for flexibility for well over a decade. We started right back in sort of the late 2008, 2009 probably, scoping and looking and really exploring the potential of flexibility. And it's absolutely brilliant that we've got to a point where we're running programs like Intraflex, which are continuing to push the boundaries and show the art of the possible. So to introduce the team who will be here today, you've already heard from Stuart, who's the project manager. You'll also be hearing from Gary Swandells, who's worked with us on and off for an awful long time on flexibility. Gary runs a business called Smart Grid Consultancy. You'll hear from Sophia Eng from Nodes. Nodes have been one of the key project partner on the Intraflex project. And I'm delighted we're joined by a couple of participants in the project as well, in Ryan Goddard and William Boyfoy. The panel I will introduce later, but we will be joined by Andy Lever from the Carbon Trust. Andy, as many of you will know, if you're involved in the flexibility world, has been instrumental in a lot of the sort of reporting, the GB Flex reports and stuff, which you'll be familiar with. So really pleased that Andy will be joining us for that. So if we go on to the next slide, please. So yeah, just a little bit more about who we are and where we cover. So those are the areas. I won't go through all the facts and figures, but we've basically got so much asset, it goes around the world about 5.5 times if you were to lay it out end to end. So a huge asset base, which is all about electricity in the future. So again, a great place to be. We've got 8 million customers across that area. So that's about between a quarter and a third of the UK population. And the bit that isn't on that slide, which is relatively new, is we're now part of the National Grid Group as well. So we're really pleased to be joining colleagues in transmission and the electricity system operator as well. So next slide, please. So the bit that we look after as a distribution network business, we take the power from the transmission operator. For us in England and Wales, that's National Grid Transmission. We take that from what's called the grid supply point, and we distribute that down to the termination point in customers' properties, homes. We don't do metering. Metering is the domain of the energy suppliers, and we don't generate or trade energy in any way. The whole grid is changing, as I'm sure you know. It's changing from as we decarbonise and we change use with electric heating and electric transport. And I'll go on to talk about a little bit more about what that means and where flexibility fits in a moment. But basically for me, it's all about making the demand follow the generation. Traditionally, with a one-way unidirectional, predominantly fossil fuel system, what you had was the generation flexing to follow the demand. The future is the opposite of that. It's about getting the demand to follow the generation, particularly renewable when it's available, sunny or windy, for example. Next slide, please, David. So in terms of what we are doing in Western Power Distribution, our priorities are really quite clear. We are still here predominantly to keep the lights on, but increasingly our whole reputation and brand is going to be driven by decarbonisation and net zero, specifically how we connect heat and transport electricity energy into our grid. So that's electric vehicles and heat pumps. We are moving from a relatively low volume, but really quite high complexity world of connecting customer assets to our grid into a world which is very high volume and actually quite standardized. So literally millions of the same type of electric car or millions of the same type of heat pump. So for us in WPD, this is complete business transformation. So it will involve cultural change, it will involve process change, organizational change, and a whole heap of other things. Obviously, the timing couldn't be better in terms of trying to run a smart and flexible grid. Ubiquitous telecommunications, easy access to data, new data science techniques will allow us, as well as we transform our business, to become a fully digitalized and optimized business using data. We won't be leaving our vulnerable customers and communities behind. We take that responsibility seriously. We know electricity is a life-preserving commodity, that is very, very important to all of our lives, but particularly those in society who are more vulnerable. So therefore, we will continue to support those customers through this transformation. Next slide, please, David. So as I say, we've been in and around and frankly leading this flexibility space in Western Power Distribution for well over a decade now. We're very proud of the work we've done. We're very proud of how we've pushed at the limits of what can be done and how we've dragged other parts of not just the UK industry, but across Europe and internationally. We continue to do benchmarking and to see reports. The most latest one was commissioned by the Energy Networks Association only a few weeks ago, and it still shows that the UK is considerably ahead of most places in the rest of the world, and that within the UK, WPD is far in the lead. What are the big things we've learned? There's a timeline there of all the different types of project we've done. The first thing we learned on our first project is that we don't know the answers. If we set out and we think we know what the market wants to deliver in terms of flexibility, that will fail. So we learned actually on our first project, that one called seasonal generation, that the most important thing for us to do is to actually listen to customers and see what they can do and what works for them. And that was a really good lesson learned, and something that we've kept with us all the way through into this current project on Intraflex, because what we heard from the previous projects, we developed the flexible power and process, the flexible power flexibility products. And what we heard from that is people wanted more real-time trading. We also heard that people wanted smaller and domestic and integrated solutions. And that's how you'll continue to see our programme develop over time. As I say, we've sort of left no stone unturned. We've done turn up, turn down, real-time, big stuff, small stuff, clever stuff with markets. So if there's anything else that we don't cover today that you'd like to speak to us about, the chances are that one of us would have some information. We'd be more than happy. We love talking about what we've done and what we've learned in this space. Next slide, please, David. So traditionally, obviously, we have been a sort of engineering business. We kept the lights on, we fixed faults, we maintained equipment, and we largely built a grid which would be relatively big and stable for its asset life. And that might be 50 to even 100 years in the case of cables and some assets. And the thing that's changing is decarbonisation. Decarbonisation, we know that for the vast majority, particularly of homes and small businesses in the country, net zero can only be delivered through electrification. There are other potential pathways. We keep a close eye on things like hydrogen, particularly green hydrogen, but we believe that electrification will be the key for most people. That's probably the most useful place to be using things like green hydrogen will be in premium circumstances. It will be a relatively expensive fuel, and therefore in shipping and industry and other high value, perhaps more industrial applications. So electrification, we think is the key. Flexibility, as I've talked about, some of the new skills from going from low volume, high complexity to high volume, low complexity work. That's actually complemented by some of the digital skills that I talked about, but there's also a whole bunch of commercial skills that traditionally we haven't had. So the sorts of skills that you will see in energy traders, within some of the energy suppliers, they're also being built up within what we call our distribution system operator team. That's not directly my area. What we've done, we've taken a conscious decision to remove that from the core DNO business and make that and segregate it and operate that separately with separate management supervision within our DSO teams. That falls under a different manager, and we have got, we'll be appointing auditors, and we're proposing to put in some non-exec directors to ensure that that business is operationally independent, and that we use flexibility as much as we realistically can, and that's outside of the control of people like myself in the core DNO business. That team are therefore building up a whole heap of commercial skills, data skills, customer facing skills, billing, legal, a whole heap of things. So again, within the DSO team. There's a lot of exciting things going along. And if you want to speak to anyone in that team about what we're doing, or to any of us about how we're structuring and separating that function, we'd be more than happy to do that. One final thing I would say is in 7 days' time, we will be publishing our final submission of our RIIO-2 business plans. This is the investment plan which will cover the period from 2023 through to 2028. So we have had about 2 years of detailed stakeholder engagement. We've published 3 draft versions of our plan, and you'll be able to see in just over a little bit more than a week's time some really exciting commitments that we're making around our DSO team and around flexibility, and we look forward to discussing those more in due course. Next slide, please. I think I hand back to Stuart.
Who also needs to put himself on, or turn his mute button off. Hey, excellent, thank you, Roger. And you know, I agree. I think I've been involved in flexibility for a while now, and I think the key thing for me is to talk to the market about what it can do. So without further ado, so if you go to the next slide, David. So what I'm going to do is I'm going to start with a summary of the project, provide a little bit of an overview of what the project aims were, just have a quick look at the plan, you know, what it looked like in terms of timescales, and then I'll talk a little bit about the approach we took around recruitment and trials design, but Sophia's going to talk a little bit more about that as well as Gary in a bit more detail later. I'll then cover off a summary of some of the learning points. I won't go through them all, and then a summary of the results that we saw. Next slide, David. So Intraflex, I think for us was a continuation of the program we've been doing since, as Roger mentioned, 2011, and I think was a demonstration really of the commitment we have to the development of flexibility services. But I think for me it's also about doing what's right for consumers. Intraflex built on the work that we'd done on flexible power, repurposing as much as we could and to ensure value for money. But also it's clearly aimed to create increased participation. And I believe that whilst we were successful, there is still some work to be done here. But I think this may just come through increasing awareness of flexibility and perhaps an increase in the number of services. We developed the project with, as Roger said, SGC and Nodes, and they created the market platform and the expertise, if you like, to give us a successful project. And of course, the hypothesis really that we've been testing is to see if such a market could be a success with far greater focus on real-time trading. And so if you go to the next slide, David. So what we're trying to do, so we were trying to develop a market design for short-term flexibility and create products for close to real time, and then procure them via this Nodes platform. And then we wanted to carry out some operational trials that demonstrated that these products could also then limit supplier exposure to imbalance costs and establish their viability to operate new services alongside business as usual. I think all of these were met, albeit the supplier imbalance cost demonstration was scaled back because the market did not see the need for it, and we'll probably cover a little bit of that off later as well. So next slide, David. So what was the plan? So at the high level, the plan was split into 2 trials. The first in June 2020, which ran to October 2020, and the second trial from February 21 to July 21. Throughout the project, we undertook regular touch points with the FSPs, and I'm personally really pleased that 2 of them are here today, so Ryan and Will. And I really hope that you'll be able to take something from their thoughts and insights into Intraflex. And I should say you're more than welcome to ask some questions through the chat later on today as well. And I'm sure they'd be more than happy to provide their reflections. So what was the approach that we took to recruitment and onboarding? So if we go to the next slide, David. So as you would expect, given the experience that we've got a number of projects that we've done around flexibility. So, and I think the key thing was that we took from them that we should start early in terms of FSP engagement. And so we did a comms exercise and leveraging that expertise that we had through all of our previous projects. I think, however, these things are quite time consuming. And the lesson for me personally is that these services, as these services accelerate more aggressively, that maybe we should in future think more creatively and engage perhaps more suppliers and aggregators in these phases. Because the key thing is, getting that liquidity in the market. And then, so in terms of onboarding was as simple as we could make it. I fervently believe that consumers probably respond better when things are simple. And I think simplicity will be key to growing this market. And I think we believe that we achieved something simple in the context of what we were able to do. However, for BAU, we would probably need to undertake a thorough review to move it over. But we'll cover a little bit more of this later as well. So if you go to the next slide, so what I'm going to talk through now is I'm just going to talk through some of the learning that we took in 3 categories. And I'm not going to go through them all with you, but one of the key technical learning points was that the metering data captured via flexible power standards does actually maintain that low barrier to entry. And going back to my point on simplicity, I think this is a further validation of this. So repurposing what we've done for flexible power for Intraflex gave us a quick win, if you like. We did also find that market messages drives market interaction, but also that some FSPs did miss our market messaging. I think this is a great learning point. I think it shows that as a trial, perhaps not everyone is wholly focused on it, and as it's not in their day job. And in the future, I'd hope that this would be less of an issue. But nevertheless, a great learning message for us. If you go to the next one. So market functionality. So we saw no requirement from the market or BRPs for an information service, as the imbalance risk wasn't deemed to be material. I think this is interesting and perhaps less of a surprise. However, I would expect some of the learning points on this to shift as the market matures. You can see that at the moment, the risk of imbalance to a supplier would be, or BRP would be low, but as the market matures and increases in scale, you would expect the requirements of BRPs and suppliers to change. So if you go to the next slide. So in terms of operational behaviours, we saw a number of interesting things emerge in general. Stakeholders were positive about closer to real-time services, and you'll hear more about that later, and creating that level playing field that was needed. What I think we need to take forward, though, is perhaps that because it's a trial and we're not penalising for over and under delivery, for example, that this perhaps informs behaviour. For any future trial, I think what we probably should look to do is try to mimic the real world more and more. And I think, as I said before, these are just some snippets of the learning. There will be more detailed commentary in our close down report, which is going through being written and reviewed at the moment. And so what I thought I'd do now is just share with you some of the more interesting outcomes from Intraflex. So if you go to the next slide, David. So we completed just over 1,400 trades, procuring a total of 831 megawatt hours. And the offers range from 5.1 megawatt hours all the way down to 7 kilowatt hours. But the prices range from £360 a megawatt hour all the way down to £60 a megawatt hour. We also saw 73% of the volume traded, with 80% being delivered. And it did vary between phase 1 and phase 2, but that's the average. I think, interestingly for me, though, this would mean that we would need to post 141% of our needs onto the market to achieve the volume that we required. And I think this is a really great outcome. we believe that as it will inform our business planning around the level of flexibility that we will need in the future. And of course, the nearer that we can get through effective procurement strategies to 100%, the better for customers, which of course is the whole point of this. The real learning that I take is that, and I know the rest of the WPD and project team will agree, is that both price and volume offers from the FSPs were being placed. And I think this is a fantastic achievement, and I am really very proud of the Intraflex team. And so it's a well done from me to David, Gary, Sophia and Richard. In summary, I think these outcomes bode well for a flexibility market. The project aligns, I think, with the smart systems and flexibility plan. And moreover, I think we can look forward, or we can see a way forward to increase liquidity and competition, which, as I said before, is great for customers. So, without further ado, I'm going to hand over to Gary, who's going to talk about the trials in phase 1 and phase 2.
Very good morning to you all. We are running very slightly behind, so I will try and get us through this section relatively quickly. So, could we go to the next slide, David? Thank you. So the purpose of the trial was aimed at establishing the viability of a very different type of market structure. With previously untested mechanics, it was decided by the project team to phase the objectives and ensure that we proceeded at a pace that our participants would be comfortable with. We therefore decided not only to run the operational aspect of the trial over 2 separate seasons, but there should also be an incremental adjustments taking place within each of the seasons. The first season objective was simply to test the willingness of potential flex providers to take part in the market that operated closer to real time than anything before, and their appetite to interact via the platform to secure their flex orders. The incremental test would ensure that we started cautiously and worked steadily with participants, gradually increasing that complexity. We were very conscious that we wanted to garner feedback throughout the process and ensure that this feedback directed us to the best outcome and not just to prove any prior assumptions we had that were correct. Some of the key principles of the market design were as follows. The market would be operational for 5 days with the gate closure just 90 minutes ahead of real time. Both buyers and sellers would have the ability to post their bid or offer, but we would take the role of market maker by publishing bids, and then sellers could respond with their offers. We would support offer submissions, both through the web portal, which was straightforward, but potentially more resource intensive, and also through an API in case any of our providers want to take a more advanced approach and integrate to their own systems. Metering would mimic the same established standards developed for flexible power, and therefore would ensure a low technical barrier for entry to anyone who's previously active on a flexible power contract. But one of the most significant decisions was made early on when we agreed that to give the trial the best opportunity for success, we would attempt to remain as open as possible and share as much information as we could with participants. We didn't want to leave them guessing or use the lack of transparency to keep them guessing. While other markets, it can be helpful for competition to leave participants to try work out the value and attempt price discovery, we believe that this would end up counterintuitive in the circumstances. The trial was therefore bound by the principle that if we were open as possible with customers, we could increase the likelihood of receiving what we desire, and in the future, no doubt become what we actually require within BAU. Can I have the next slide, please, David? There were 4 distinct stages with a possibility of 5 potential tests, as the final stage would either be test 3 if we were struggling to get the level of interaction from flex providers, but if the predetermined thresholds were met, then we could skip 3 and go straight on to test 4. Test 0 was a formality for all providers. It was essentially a commissioning test that would verify that API, etc., was completed successfully and they knew the process of posting offers into the marketplace. Everyone had to do this in order to go live with the operational tests. Test 1 was a simple case of SGC placing bids on behalf of WPD at a similar value to those established by Flexible Power, which was £300 per megawatt hour. Then these could be matched by offers on a first come, first served basis. Test 2 was essentially the same from a provider perspective, but was monitored and measured to ensure that there was sufficient interaction from the participants to increase the complexity. Had this been unsuccessful, we would have introduced a blanket increase to the rate, but as we saw the majority committed to orders, we were able to go on to test 4. Test 4 was intended to see whether price sensitivity could be used to direct participants to where their flex capacity was of greatest value and need for the network. When everything was valued at £300, then a provider may just place their offers in the half-hourly periods in the same order as they find them in the marketplace. Early in the day would come up first, but in reality, the more critical periods would typically be later in the day with higher associated volumes. To address this, we created a formula to reflect scarcity and used the £300 as a baseline, and the periods with greater volume would receive an increased rate, whereas the lower volume periods would return a lower rate. Next slide, please, David. As we'd hoped, and to our delight, we were able to run through the incremental stages, culminating in a successful result in Test 4 and demonstration that scarcity principles would help direct the capacity where it was most needed. Our only disappointment came from the failure to stimulate offers sufficiently that would result in pre-bidding from providers, preempting when we would need the capacity and post bids, and therefore not just attempt to be the first to respond after we post them. It did, however, provide unexpected learning in respect of a number of the participants, particularly those with newest asset types, such as aggregations of smaller, less predictable units like EVs, flexible loads, and domestic batteries. With the feedback we received, it was apparent that the structure was tipped in favour of conventional assets that in general were able to predict their baseline far in advance, enabling them to respond to the bids that we placed up sooner. In some instances, this was as little as 12 minutes after they were posted up. So this was then fed into the phase 2 design. And next slide, please. I don't have a great deal of time to go through this in any great level of detail, so it's worthwhile noting I've previously done a presentation of the results, and these can still be accessed and downloaded from WPD's innovation website. Please feel free to contact any of the project team if you need any assistance finding it. But many of the key principles from season 1 were modified. Market opening was extended to 7 days. Initial bids at 7 days would be placed with no real value to signal requirements 7 days ahead. This identified the specific half-hourly periods and the exact volume, but as they were only set at an initial bid value of £1 per kilowatt hour, it was guaranteed not to attract any offers from the participants that would end up matching it. We focused purely on weekday evening peaks for this, as it would be most likely to reflect BAU requirements. The publishing of bids in advance and with no value, FSPs would be encouraged to place offers against the bid volumes that were published, and over the 7 days, the price would be incrementally increased. Wherever the bid price matched or exceeded the provider's offer price, an order is immediately created, and this would continue on until gate closure at just 90 minutes ahead of real time. In spite of locking down so many of the principles and maintaining the commitment to transparency, there were still quite a number of variables worthy of testing that include the manner in which the price increments would be implemented. Next slide, please. The table now on screen summarises the test, and again, the final test could have gone one of two ways and was only to be decided based on the performance of the earlier subtests. As with season 1, we kept it simple to start with. So test 1, as with the majority of the tests, included a fixed time period at which we would place our bids onto the system, which would be between 10 and 11 AM in the morning. Test 1 to 4 all ramped up the increments quickly, so that by T-3 days, 3 days to real time, to go, we had achieved the full value that was going to be on offer in the marketplace, providing plenty of time for providers to place offers and secure maximum price orders. During the 2 final tests, it did not reach maximum price until the morning of delivery, which is a reference to the whole point of the project name being Intraflex, as it was the intraday bidding. This would act as a major factor in levelling the playing field for the smaller aggregated asset providers. We also carried over the scarcity pricing principle for further testing on from the season 1 results. It should be noted, however, that with the new market design, it was significantly less important, as there was a very high response rate across the board on the bids that we put up, and offers for the vast majority of capacity were fulfilled. The time is not only, this time it has not only included all our primary objectives, but also of the stretch objectives too. This culminated in what could only be described as a true market, because we saw competitive behaviour clearly demonstrated between bidding parties right through to the elusive pre-offers in expectation of incremental price increases and immediate order matching. So that's the end of this piece. If you have any further questions, as I say, there are other reports, and you can contact any of the team members to find those. Back over to you,
mute
Stuart.
button didn't. My mute button didn't work. I was panicking then. We're now going to just hear from Sophia, who's going to talk a little bit about nodes for us. Thank you, Sophia.
Great. Thanks, Stuart. So I'm going to tell you a bit more about nodes, marketplace, how we worked with the flexibility service providers to onboard them and to obtain feedback, and what we did with that feedback. So for Intraflex, WPD, we can go to the next slide, David. Thank you. For Intraflex, WPD used nodes near-term market, which we call short-flex. The short-flex market is a continuous market where flexibility is traded as short products close to real time. So for Intraflex, WPD bought flexibility as 30-minute products, and we set market opening to 7 days ahead of the delivery date, and gate closure time was set to just 90 minutes prior to delivery, and minimum bid size was set to 1 kilowatt. So that allowed smaller assets to participate as well. All trades that are executed in the short flex market are considered as activated. So flexibility service providers receive an activation price only, and they're paid on a pay as bid basis. So after buy and sell orders are matched on the platform, sellers receive a dispatch notification. So on the platform, you can configure what type of notification you want to receive and when you want to receive it. And lastly, after flexibility that has been sold has been delivered, we also compared meter values to baselines submitted prior to trading. So in order to validate that flexibility that had been sold was also delivered. It's also worth mentioning that all the platform features can be accessed manually or through our API. So we had some flexibility service providers who use the API for all or some features, and some that interacted entirely manually with the platform. Next slide, please. There were a number of steps that participants needed to complete in order to participate. First, sellers needed to register with nodes and provide basic company information, contact details, invoicing details. Second, flexibility service providers signed nodes membership agreement, whereby they accepted nodes rulebook. So nodes rulebook sets out terms and conditions for participating. And third, as Gary mentioned, flexibility service providers also needed to implement a simple API to send meter values. And last, prior to go live, sellers also needed to complete a test trade. So that's the test 0 that Gary also mentioned. For phase 2, we added a pre-qualification form that participants needed to complete at the end of the onboarding process. So this was something that we added for WPD's compliance with the utility contract regulation. The next slide, please. We sought feedback from participants during the trial and at the end of both phase 1 and phase 2. So during phase 1, we sent out surveys to participants after each of the tests. The response rate wasn't fantastic. So for phase 2, we arranged short bilateral calls with each participant. And then we also logged all feedback that we received sort of ad hoc over the course of the project. Next slide, please. We took almost all feedback on board, and we made consequent changes between the first phase of the project and the second phase of the project. And that included tweaking some parts of the platform, and it included developing some new features. I won't go through this entire list, but some changes that we made included making it easier to upload multiple orders at once manually. We made settlement information available directly on the platform, and we implemented a new order type. And then we also made some changes to enable WPD's more complex bidding strategy for phase 2. So we built a messaging functionality, for example, so that WPD could send messages through the platform whenever WPD posted new bids or edited existing orders. And looking ahead, we'll also incorporate the feedback that we received during phase 2 and at the end of phase 2. So we'll incorporate some feedback related to meter value submission and baselining. And back to you, Stuart.
My mute button worked first time as well. That's excellent. So, right, after that, if we just run the next poll question, David. So, do you think that a near real-time market is likely to attract more participation? A little while longer. Excellent. That looks like everyone's who wants to respond has responded. And I guess, I suppose that's quite an encouraging result. So nearly 3/4 of people thought it would do so. Just as a reminder, if you've got any questions that you want to ask anybody from the team or later on the panel, if you can just put them into the chat or raise your hand if you've got a particular question. So without further ado, what I'm now going to do is, as I said before, we're going to hand over to Will and Ryan from EV Energy and Welsh Power. And I think, as I mentioned before, I think it's a potential opportunity for everybody just to really engage with FSPs who have participated in this project and just hear what they thought. So without further ado, I'm going to hand over to Will. I think he's first. Over to you.
Hi everybody. So yeah, I'm Will Beaufoy. I'm a software engineer at EV Energy, and yeah, as it says in our slogan, we do cheaper, greener, simpler electric vehicle charging for everyone. So that basically means saving people money, saving people carbon, and making it easier to charge their car. Next slide, please. Same. So next slide, please. Yeah, so just a brief what we do. We have a mobile app, users download a mobile app, and then on the back end, we connect to their car or their charger or both to manage their charging. Next slide, please. And yeah, so we also have back-end integration with flexibility markets and distributed platforms. So, you know, part of our offering is that we can engage in things like WPD to provide flexibility. I think that diagram is from a California project that we have, but we have it obviously in the UK as well. Next slide, please. So this is just some of the things, other things we do in flexibility. We work with UK Power Networks, Project Shift, then of course, WPD Intraflex. Peak Flow, some of you might be aware of, a way to submit tenders. Some work in Australia, California, Texas, and then Flexitricity to try and enter into the balancing mechanism. Next slide, please. So from our trial in Intraflex, we participated in that. We were very happy with the results. So yeah, one of the challenges was the forecasting and then delivering what we were forecast to do. So we experimented a bit with that. We downgraded the forecasts, to try and be more accurate. And this worked, so we got a better payment percentage from more accurate forecasts as the year went on. And yeah, we saw more activity in general as we came out of lockdown earlier this year. So yeah, as an example for June, we had over 4,000 kilowatt hours flexibility between those dates. Delivery performance 114%. So that sounds good, but it's slightly over. We did more than we predicted, but we'd have liked to predict exactly what we would deliver. So that's what we did. And so we got a payment of 71% because we weren't totally accurate. But we got average £6 per EV per month. I see some questions, but I'll answer them at the end of the slides. So grab the next slide, please. So our conclusions from the trial is with as little as 50 assets, you can reliably forecast and deliver. And of course, there'll be many more coming onto the system in the coming years. So we'll get even better forecasting. So we're pretty positive about the whole thing. We were very happy with Nodes Market. I would say they're probably the best organization we've integrated with that do that, because we integrate with quite a few, and we were very happy with the Nodes API. At the time, other organizations we've had to say had to receive an email or something, which is not great. So it's great they had a good API. And yeah, we found the Nodes interface good as well for placing bids. Our commercial team were very happy with that. So more of that, please. Next slide, please. Oh, okay, that's the end of our one. Shall I just briefly look at a couple of questions?
Yeah, so yeah, there's a couple of questions in there. Might be worth they look relatively simple.
Sure. So I think when we're sending data to Intraflex, we just use the Intraflex API endpoint. We send it from our system. And then getting the data from Nodes then calls our API. So we wrote an API endpoint, which then calls us. So it's not a sort of it's standardized in the sense of APIs are often standardized in the way that they work, but it's not a sort of system that we brought in. It's something that we wrote ourselves. And the second question, what is BESS? So I'm more on the technical programming side, so some of the terms I'm not quite familiar with.
It's battery storage system.
Okay.
Well,
we haven't looked at battery storage systems. We've looked a bit at Tesla Powerwalls, but that's sort of more experimental. So it's something we'd like to look at in the future, but it's mostly EVs at the moment.
excellent. Thanks for that, Will. And I suppose from my point of view, it's just perhaps nice that we can invite FSPs to these sorts of events to share their experiences, I think. So thank you. Ryan, over to you.
Good morning, everyone. My name is Ryan Goddard. I'm Commercial Optimization Manager at Welsh Power. So I'm responsible for maximising the commercial performance of the assets that we manage. I'm just going to go over a few things. So a quick introduction to Welsh Power, and then going to go into our experience in flexibility markets, and then our experience with Intraflex in particular. So if you go next slide, please. Thank you. So Welsh Power's quite a young company. It sounds a lot bigger than it is, but it started off life as a bigger company. So it was founded in 2006, where we re-energized the mothballed Uskmouth Power Station, developed Haven Power, supply business, and book 7. changed strategic direction 2011 as management buyout and all the big assets and companies were sold for a focus on flexibility, where we built and would develop and built 26 distribution connected power plants, all gas fired, and then along the way we've picked up some other assets as well. So we manage over 550 megawatts of flexible generation, and we're currently developing and constructing grid stability projects across the UK, sorry, and also some battery storage projects. I guess our company line is that we manage the operational, financial, and commercial management of flexible energy assets. Yeah, so it's a small team of sort of 37 employees, sort of growing over time. But that's Welsh Power. And then moving on into our experience in flexibility markets. So the map on the slide sort of shows where our various assets are. So we're located across the UK. All of our sites are unmanned. We've had ancillary services in National Grid, quite big in store when it was a bit more a different service to what it is now. And we have sites that are active in the BM, and we have contracted most DSOs across our sites. We see DSO services as an important revenue stream, but also an important opportunity for DSOs and the TO to maximise the benefits from flexible and distribution connected assets. But we have had a very mixed experience from working with different DSOs. Very slow development. This space has been sort of active for a number of years now, and I don't think we're that much further down the line than when sort of the first services first came about. So some lack of commercial knowledge in DSOs, and there needs to be better cooperation between ESO and DSOs to fully recognise the potential benefits of flexibility markets. But next slide, please. And I guess this kind of comes on to Intraflex and where that sits. And I agree with Will. Intraflex has been really positive for us. So close to real-time procurement makes sense to us. And the reason why we participate is it's good to sort of see where that markets are heading, and also it provides another revenue stream for us, for our assets. Our experience so far has been positive. So we think that the Intraflex team and the project itself has been dynamic. The phased approach has been really positive. So there have been some learnings taken from phase one, implemented phase two, and quite quickly turned around. So as sort of Sophia mentioned about adding in the ability to add bids in bulk and things like that is really positive, and the notifications and those types of things have been really positive. Conceptually, it works. So it works with the BM. It allows both the provider of flexibility services and the procurer and the DSOs to value flexibility closer to the real value. So you're not stuck with the contract that you signed for 4 years at a certain price, and with all the volatility and commodity and energy markets at the moment, it's some contracts you sign into can be non-profitable at some point if things change significantly. So that's really good, and also it promotes competition where competition exists, which was good, and that's sort of part of the phased approach, which worked well. But I guess on that, the competition would be better if it was a bit more location specific. Obviously, it's a trial and it was sort of across the whole WPD network, but when it starts going down to specific parts of the network, we believe that that there are some really good benefits that can sort of come from the product itself. And also for us, we're a bit larger, so some of our sites that participated, we can always participate within the project because the volumes are a bit small for us. So we had to sort of make the volumes work and the price work for us, but it was it's good to see as a project, and it worked well for that. And then what next? I think it's important that the learnings are shared. So as I said, there's not much cohesion between different DNOs and DSOs. It'd be good if other DSOs could get involved and maybe roll it across sort of on a wider scale, collaborate with the ESO, and then I guess finally build in the locational element and increase the volumes on the platform. And then, yeah, it'd be there's a lot of potential there for the project, and we think it's one of the better ones we've been involved in so far.
Thanks, Ryan. It's just a quick question, might as well deal with it now. Do you have a centralized platform that you use to control your assets, and do you make use of international standards?
Yes, so we have a centralized platform. So we again hook into the API that's provided, and that's through participating in flexible power, and that was made really easy, the connection there. And international standards, I'm not too sure what is meant by that part of the question.
We can revisit it in the proper Q&A. Okay. Jim's raised his hand. We can let's move on, because I'm conscious we're running out of time, but we can pick this one up later.
Okay.
So if you go to the next slide, David. So what I'm going to do now is just going to go to the panel session. So if you all change your view to gallery view, I'm not sure where you go. Oh, I think it's down. It's somewhere. Oh, it's in the top right hand. So if you go to gallery view and then but take your mic off and turn your mic off, turn your camera off, you'll be able to see the panel. And then so if the panel can just all stay on camera, and then I'll just hand over to Roger. Hope that all makes sense. I'll just do my bit.
Right. Excellent. There we go. There we go. I think I'm on. So yeah, panel time. So yeah, joined by Andy Lever from Carbon Trust, Richard Sarti from Node, Ryan Goddard is staying on from Welsh Power, and William is back for EV Energy. Thank you very much to the two of you who've already presented. Do appreciate it. It's always a big ask asking for people's time. The market's just so busy and there's so much other things to be doing. It's genuinely appreciated. So my thanks from you. I'm going to come to you in turn. I'm just looking. Andy, are you there? If you want to come off mute for me, I'm going to start with you. I just wondered whether you'd just first of all like to sort of introduce yourself a little bit and some of the work you've done with the flexibility reports that I referred to earlier. But I'm also particularly keen to hear from you around how was the Intraflex, for you, and if you've got any sort of specific tips or tricks for the future and where we go next.
Sure. Yeah. Thanks, Roger. And yeah, good morning, everybody. I'm Andy Lever. I'm a director at Carbon Trust. I head up our energy systems work. And a big part of that has been focusing in on kind of energy flexibility. And I think, as was mentioned earlier, we published just over the summer our latest kind of report looking at the value of energy flexibility to Great Britain in a net zero 2050 future. And that followed on from previous work we've done with BEIS back in 2016, looking at flexibility across the electricity system. That report and some of its findings also fed into the BEIS Smart Systems and Flexibility Plan update over the latter part of the summer, which can obviously very pleased to see that was taken as a kind of strong evidence point. I mean, I think, Roger, coming on to your question around Intraflex and kind of how this fits, I mean, I think, the headline figures, of course, out to 2050 were kind of between 10 and 17 billion pounds of value in saving by adopting a flexibility kind of a led approach to decarbonising not just the power sector, but also heat and transport sectors. A big part of that value sits within, of course, the distributed network. It's connected at the local level. And even just a highlight of that, the value, I think there's a couple of comments coming through on V2G and smart charging. The analysis that we undertook stated that kind of £4.6 billion per year of value was associated directly with demand side response and predominantly with V2G as well. So, you know, it's a very potentially accessible way to achieving kind of low cost flexibility into the system. And I use the word accessibility there because I think that is the key. And I think Intraflex has been good to see how you have been trying to get access to and encouraging consumer uptake. The consumer engagement aspects, the digitalization aspects, the business models, the interoperability aspects are all kind of really key enablers to making sure that you can access those smaller flexible assets. So yeah, I think it's quite timely, and I think it's a good example of what we need to do more of to unlock that flexibility and bring costs down fundamentally for us all to get to that net zero kind of future.
Excellent. I'm just struggling a little bit with my mute button if there's a pause every time. Thank you, Andy. That's really useful insight, particularly when we'll come back onto sort of flexibility from demands such as heat storage and vehicle to grid and EV charging in due course. Perhaps just turn to Richard. Richard, if you just want to introduce yourself, and my sort of specific question to you is on Intraflex. How's this trial sort of comparing to what's going on elsewhere in the world?
Yeah, thank you, Richard, and good morning, everybody. Yes, my name is Richard Sarti. I'm Director of Sales and Marketing at Nodes. I've been with the company for about 2 years, but prior to that, I spent 10 years at Nord Pool, who many of you may know for setting up the wholesale or part of the wholesale electricity market in the UK with regards to day-ahead auctions and trading around that. So I think with regards to how Nodes has developed, we're very much sort of born out of a mixture of market-based activities through exchange operations, but also through grid operations as well, and understanding the complexity that the grid operators are facing with regards to this energy transition. And that's what's really sort of born the development of Nodes and as a result of our understanding of these challenges. I think from my perspective, having seen what we've achieved with Intraflex, I think the project itself has been really sort of groundbreaking in the UK specifically, as we've looked to develop a real-time activation market or close to real-time activation market. And sort of I'm really excited to sort of see how we take this through to the next stage and how we integrate this with other aspects of the market, because I think the interoperability between different markets such as the reservation market, where you're procuring flexibility in advance, and perhaps a standardized approach to activation of that flexibility will help bring, reduce barriers and create liquidity. And this is certainly something that we're seeing in other projects that we're working in, particularly sort of our own backyard, if you like, is Norway. And we're involved in a project there where we are working with multiple DSOs, identifying flexibility in constraint areas at the low voltage level of the grid, and then being able to aggregate that flexibility and offer it up through the multiple levels of the grid all the way up to the TSO markets. And so I think this is really important when considering the concept of value stacking for assets, being able to enable these assets to offer their flexibility at different layers of grid, and building in the new revenue streams, particularly as Ryan and Will have already mentioned. I think is going to be important in order to help speed up the energy transition, as we're able to access assets that can resolve different problems in different areas of the grid. And this is certainly the projects that we're involved in Central Europe. So as I say, we've got a project similar to this in Norway. We're also involved in a project in Sweden where we're again dealing with constraint issues about getting power into Stockholm during cold periods of winter, and how to address that. And through market-based solutions, we're able to defer the investment needed, but also provide the relevant support to the grid operator to get access to that flexibility to ensure that the lights can stay on during these, whilst we wait for the copper to be put into the ground, essentially. So yeah, I think what we're doing here in the UK is incredibly exciting and market leading in that respect.
Flipping mute button. Yes, thanks, Richard. That's really really good to hear that it's sort of genuinely quite interesting and exciting, and it will be interesting to see how much of the flexibility is used for that kind of shorter term deferring reinforcement, and how much of it will indeed be going on for much longer duration. Because obviously, wherever you site your distributed energy resource, you could be behind multiple constraints. Even when one goes away, there's still a strong probability that even in the same location, you'll be able to feed into another one that's sort of further up the system. So I think that's again, we're going to get a better feel for that as this market grows going forwards. Ryan, I'll turn to you. No need to introduce yourself. Obviously, you've already done that. But you talked about how your business has sort of transitioned from big stuff and really sort of homed in on this smaller, more sort of distributed market. One of the things we used to say when we first started about sort of DSO level flexibility is that really it was either the icing on the cake or the cherry on the cake. The main cake was the transmission and the energy supply market and balance, and any revenue you got from the DSO or the DNO was sort of the icing on the top. It was over and above. It was additional margin. Obviously, you've pivoted your business more towards this. So how do you see that balance sort of going forwards between ESO markets and DSO markets?
Yeah, so it's an interesting question because still, I guess because DSO markets are so much in their infancy, we don't see in the short term definitely that we'll ever rely on DSO services, and unless there's a big shift from the way the system's managed, I don't see a world where the main revenue stream will come from the distribution network. I think, but for us it's more additional opportunities and I guess opportunities to help in constrained locations where some of our sites might be. So yeah, that's sort of where we are at the moment. But things could change depending on the sort of level of collaboration between the ESO and the DSOs in the future.
Yeah, for me it's that sort of joining up of programs is sort of probably the next level where the world becomes still competitive, which will drive down for us the cost of flexibility, but for you open up additional expertise, additional sort of services and products which will increase liquidity in the market, which is a question I'll probably come back to in a moment. And last but by no means least, William, again you've already introduced yourself, but perhaps you could just sort of take me through sort of EV energy. And there's been quite a few questions in the chat around vehicle to grid. Now, one of the things, we've got other innovation projects which are looking at the vehicle to grid and looking at the services that you can get from that. But why are there no cars that can actually do vehicle to grid now? The few that there were with Nissan seem to be dropping out of the market. What's happening there, and is it going to come back?
Yeah, it's true. It is something that is often promised, often lots of articles about it, but it doesn't happen so much. I mean, my personal view would be that it's not something that the consumer, it's not their top priority when they're buying a car or a charger. I mean, obviously you can make money from it, but maybe it's not clear to them, or they just don't think it's worth it. So yeah, I think it's about the consumer incentives. That would be my opinion. Why it hasn't taken off. I mean, I think it could take off, but you need to change the incentives a bit, I think.
Yeah, I think it's probably more to do with sort of industry structure globally, because obviously cars are made for a global market. So something isn't going to be manufactured with a different capability in the UK or indeed in Europe, unless those markets are emerging elsewhere in the world.
Yeah.
I would tend to agree. It does seem a great shame because the potential we're seeing for vehicle to grid as well as smart charging is absolutely huge. It's almost like the perfect flexibility resource. This is completely invisible to the consumer.
We've actually found
it as long as they've got enough charge, they're happy.
Yeah, there is we found that in the US, because in some parts of the US they have a bigger risk of power cuts, there's a certain type of consumer who wants vehicle to home. Like that's what they care about, because they're very concerned with, well, one, it's a sort of feeling of, you know, I'm powering my own home from my car backup, but also the practical avoiding power cuts. So that, in a way, that seems to be more in line with the consumer preferences. But obviously, that depends on a substandard electricity system. So yeah, you don't really want that to be the reason, but that's how it is. We found right now.
Which again is highly variable around the world's, you know, performance of grids, and obviously in WPD you've got the best performing grid in the UK as well. So you know, power cuts just really aren't the thing for us. Excellent. Well, thank you very much. If you want to pop your question in the chat, that would probably be the most easy way to do things. If you even just want to put, I want to ask a question, put that and I'll come back to you. Alternatively, you can do the raise hand thing, but I'll be relying on Anna or one of my colleagues to spot it, because you don't always spot that somebody's raised a hand on this. So I don't think we've got a specific question in the chat at the moment. I'm just having a look at it, and on the basis we haven't, I'll ask one of my own of all four of you. I'd like to know what you think should happen next. What's your vision for DSO flexibility in the sort of medium term? So perhaps over the next 5-7 years, something like that. So perhaps I'll start with yourself, William. What would you like to see us doing more of, and DSOs generally doing more of over the next few years?
I think you and the DSOs are doing the right thing. I mean, it's the government needs to do a lot, which it's also doing in, you know, requiring charge points in homes, heat pumps and stuff like that. And so, you know, once the market, I think, will grow very fast, people having these connected assets in the next few years. And then, yeah, I mean, we've been happy with the way the trial's gone. So as the market increases in size, I think it should all be good. So that I'm sure that there will be a vastly larger market in 5 years than there is now. Yeah, we're very excited about it.
Yeah. Perhaps I'll turn to yourself, Ryan. What would you like to see us do other than giving you more money?
So I'd like to see, as sort of alluded to earlier, is better collaboration would be great. I think, as I said again earlier, the fact that we've got contracts with various DNOs, and all the contracts look very different. There's the standard contract through the ENA, I think, confuses things and is too long, and I guess it doesn't really help because every product is still different. I also think there's space for short-term and long-term contracts in places where they're needed. So if there's a long-term constraint requirement, sort of something like flexible power, and that thing still works, and the short-term and the Intraflex style product could also work well in different instances. So I guess more development and I guess collaboration with those type of things, and the standardization across the UK.
Yeah, no, I mean, that's been a recurring theme, is the length of the contract and the fact that the standardization isn't as standard as you'd like it to be. Again, I've heard that all the way back to the early 2010s, to be perfectly honest. The challenge when we were doing the Falcon project, which would have been probably about 2012, I think, something like that, was to get the contract down to 3 pages from whatever it was originally. It was about 87, I think it was. And we managed to get it down to 12 after much arguing with the lawyers. But it does seem to have sort of become a little bit static. So I'd still like it on a page. You know, basically, the shorter it can be, you know, the better. So that's my challenge back to the sort of DSO teams. And one of the things we've been trying to do, Ryan, is sort of balance the go it alone, you know, WPD will just charge off and do our own thing and everyone will just have to follow. The problem with doing that and getting too far ahead is you end up out of sight, and then no one's going to follow you at all because you haven't gone anywhere. So one of the things we've been doing through the Energy Networks Association is Open Networks is trying to encourage them to sort of come along behind us, and that has meant that some of the things we'd have liked to have done unilaterally we haven't been able to do, so we haven't been able to bring everybody else with us. But you've certainly got my word that we'll continue dragging you know, everybody along, you know, as fast as we possibly can. I do think that sort of cultural change, I think the separation of our DSO activity, that if we see other DNOs doing something similar, I think you'll get a very different culture. I mean, I think you'll see it coming together. I might come back and talk about FSO in a moment, depending what other questions we've got. Where should we go next? Andy, sorry, let me just bring you back in on that question. What do you think we need to do next?
So I think we need scale. I think we need to kind of get on with things. I'm sure everyone on the call will be subscribed to that, of course. I think it's been already mentioned around collaboration and interoperability. You know, these are all things that even our own, coming back to the analysis we did on flexibility over the summer, the value at a kind of national level of providing flexibility is twice as much as is realized at the local level. So it just really underpins that, you know, that good collaboration with, you know, the ESO and making sure the assets are being maximized. As I said before, these are all connected at a local level, but they have a kind of national a national service to make. And I think I guess the other kind of key thing amongst all of that is consumer engagement. And to be fair, I mean, I think flexibility is still one of those terms. Again, people on this call will be familiar with it, but you know, the broader consumer groups don't I think still really understand what we mean when we say that. So I think there is just this continued need for communication and leadership around this to consumers, to partners, and that of course can be backed up by, we're big proponents and supporters of kind of flexibility first when we are thinking about EVs and heat pumps. You know, we should really be thinking about having that dialogue and having that ideally functionality when people are thinking about switching heating systems or changing vehicles. So I think there's a few things in there in terms of some of the enabling factors that I think need to be in place. So yeah, lots to do.
Yeah, excellent, Andy. That point around how do we balance the DSO and the DSO needs, and how do we pull everything together, will be another sort of recurring theme. You know, yeah, no, totally. There's a question in the chat. So you can come to you, Richard, if that's okay. Steve Goff, who's somebody, assuming it's the same Steve Goff that I've known for a very long time. It's very good you could join us, Steve. Thanks very much. He's asking how all these sort of platforms can coexist. So clearly we've got flexible power for one set of products. We've now developed Intraflex as part of Nodes. How do you envisage this sort of ecosystem of multiple sort of marketplaces sort of living and breathing together?
Yeah, I mean, I think that's a great question, and you know, it's something that gets asked a lot because there are numerous ways of buying flexibility currently. As I said earlier, you know, the way in which flexibility is sort of being bought currently is predominantly through bilateral contracts. So looking for tendered services to buy flexibility in advance, where you receive an availability payment, and then subsequently when the asset is called upon, an activation payment. And I think that, you know, that market is there to assist with helping the DSO de-risk its future needs. But it also, you know, is providing revenue streams for assets that can make a confident prediction that they're going to have that availability that far out on the curve, depending on the duration of the contract. I think that, one of the things that we're doing with the Intraflex market is by having a standardized activation market, you can then, the procurement of that long-term flexibility through tendered processes, third-party systems, etc., can still be done. But then the activation of those assets can be done in the near-term market, so that all of the assets are competing against each other in a level playing field. And that ensures that the DSO is buying flexibility at the lowest price at its time of need. And so from that perspective, we do see interoperability between sort of the activation market and the third-party systems that are being used to procure long-term flexibility. And then having an understanding about the value stacking options that the assets have, they can then make conscious decisions about where to activate that asset. Should it be offering flexibility? Should it be doing something in the balancing market, or should it be doing something in the wholesale energy market? And so giving the information through price discovery and sort of transparency allows the asset owners to make much better decisions about how they dispatch their asset and where they dispatch their asset. So I do think that sort of bringing these markets will sort of come together over time. I think, going back to your earlier question as well, I mean, I think one of the key components for allowing or enabling these markets to become more interoperable is to create standardization about how these markets are to operate. So, and that means that bringing together the DSOs and having a common understanding about how these markets should be working. So that, I mean, we saw from Ryan's presentation earlier where Welsh Power have got assets across the UK, much the same as pretty much, I'm assuming Will has as well. Entering into different arrangements with different DSOs is going to create barriers, stifle liquidity, and prevent the interoperability of these markets. So I think, the sooner we can get some kind of common framework, if you like, across the DSOs about how flexibility can be procured, I think that would be key.
Yeah, thank you, Richard. We are nearly out of time. I was just going to pick up one more question, which was in the chat, which was from Keith Evans, which is what the backup plan is when these wonderful markets fail to deliver at short notice. I think the question is, do the lights go out if it doesn't work? Well, that remains my job on the sort of DNA side of the business, is to ensure that the lights stay on. So we are working through with the DSO to understand how much of the smart grid flexibility I can actually flex my own system. So changing the network configuration, joining different bits of the network together, or manipulating the voltage, for example. How much of that may well play into the DSO markets in the future initially, then the markets pick up, and then how much do I reserve back in case of emergency? What are my emergency levers if the DSO can't satisfy my requirements? That's a very active conversation which will continue over the next few years, and we'll be talking to all participants in the market around those sorts of rules as we sort of develop further. The key to it is never having to use them, and the way you never have to use them is to have confidence in markets and to have sufficiently liquid markets. So I was going to give sort of the last word on the panel to Ryan and William. What do we need? What needs to happen to ensure that these markets are as liquid as possible? Liquid markets for me mean reliability. They also mean low price. So what do they mean to you, and how do we get there? Perhaps Ryan first.
Yeah, so I guess for us, I guess increased participation, which is an easy thing to say, but I think there are a lot of there are a few things that need to be done. I think using APIs and other standardized processes like that are a good way for sort of to get the technology there to increase participation. I guess there needs to be the volume and I guess revenues available. Prices will probably start a bit higher, and then over time, as more participants get involved, prices will come down. And I guess it's the chicken and egg type situation. You're not going to have people participate unless there's money in a market, and then once it's more established, then it does become a more business as usual process. and people participate alongside the other markets that are available.
Yeah, and that's precisely why at this stage we in WPD have not been throwing our smart grid flexibility into these markets in terms of sort of voltage manipulation, which some DNOs have been doing quite aggressively. As you know, our whole mantra for the last decade has been market building, and so I'm not going to build a market and then destroy it by suddenly pitching in a load of very low cost and flexibility, which will have an important role to play at some point in the future. It's just not right now. The timing just isn't right for that. William, for you, presumably a liquid market is more EVs, more and more EVs.
Yeah, exactly. And the more you get, the more you can smooth out, irregularities and things like that. But I think more EVs is, we know that's going to happen. So we don't need to ask for that unless there's some massive change in the plan of the government's plan and everything. But we're pretty confident that's going to happen. I think that you need to make clear to the EV owner the rewards. So that's something we do, is we offer them rewards. You can also do the bill credits or something. So obviously give them some of the benefit from flexibility. Otherwise, why would they participate? We thought about some people maybe on this call be interested in helping the grid, but your average person is probably not. They don't even think about that. So financial rewards or something like that. Technically, as I said earlier, yeah, a standardized way of doing this would be good. So we built a solution to integrate with Intraflex and nodes. We wouldn't want to have to do that for every single DNO and every single website like nodes. So yeah, if there was some standardized way, that would be great. And we'd also like to see the move to half-hourly settlement for entering the balancing mechanism, which we'd like to do. We can only do that with people who have smart meters, which is obviously not everyone at the moment. So we'd like to see that accelerate and continue as well.
Yeah, we've nearly made it through the whole of this seminar without mentioning smart meters. So that was particularly excellent. But yeah, I couldn't agree more. Both in terms of the half-hourly settlement, you need sensible pricing. And you also need real simplicity for customers. You're right, customers don't need to know what flexibility or visibility or any of that is. They just want a cheap EV with low running costs, or something that can lower their energy bills for other services. Need to make it dead simple and worthwhile for people. That's all you need to do. Simple job, William. I am out of time. I always run over on these things. So apologies if we haven't come to your question. We'll leave the chat open. So if you want to pop your question into the chat now, we'll keep answering those questions even after the seminar completes, so you can see them. And at that point, all I need to do is to say thank you to William, to Ryan, to Richard and to Andrew for joining this panel. Much appreciated, and I'll hand back to Stuart.
Thank you, Roger. And I hope everybody else found the panel insightful. And so what I'll do now is I'll just run through very, very quickly, because I'm conscious of time, a summary of Intraflex from my point of view, and then I'll just touch on what we're thinking about as next steps. So I think from my point of view, both the group and individual feedback from stakeholders has been really positive on Intraflex, and I think this has sort of suggested that this approach and solution is necessary for market growth in flex, and I think this is a validation of what Roger alluded to before in that journey we've been on since 2011. I think I'm also encouraged that the participants would continue to use the service if we offered it as BAU. And I think finally for me, I think the thing works. So I think that's got to be for everyone. Next slide, David. So closer to real-time trading, this enables FSPs to maximise the flex that they can sell to us, and I suppose that should level things up for participants focused on particular products like EVs. And I think finally, marketplaces like nodes, they do facilitate price discovery, as we saw, and it should enable us to keep the bills down for customers, which is good. So what is it that we're thinking of next? And I think from my point of view, if you go to the next slide, David, these slides are just a sort of a teaser of what we're currently thinking. So we're currently, I suppose, in the context of Intraflex, thinking about a couple of projects, and that's based on what we now think the future might look like. And I think Steve Goff asked a question about how we might integrate with flexible power as well. But of course, from my point of view, we have limited time. ED2 is 2023. We've been doing these trials for a while. We really need to sort of at least have some handle on what it looks like. But I would also argue that innovation is still central to this roadmap. There are some things which I think we need to focus on just as much as the market, which is the capabilities, as was alluded to before as well. And so this is where, and these are working titles at the moment, AIM and Vesper come in. So if you go to the next slide, David. So our view of what the end-to-end process might look like is formed out of our trials in flexible power, and bringing those learnings together in terms of what we've been doing with flexible power and BAU and innovation, I think is key. I think we see a world which is increasingly around multiple routes to market, with market-led responses, and us providing signals to the market. And it may well be that it's nearer to real time as well. But going back to Steve's other question around the evolution of flex services, there is a document that's available, and I think the link has been sent, and there is a workshop next week as well, and Matt Watson asked me to remind everybody about that. So I've done the plug, Matt. So if we go to the next slide. So this really just very high level shows, I think, from my point of view anyway, how I see this world working. So as you can see, flexible power becomes really like a procurement hub for us, whereby various markets, would be have standard APIs. Going back to Ryan's point, I think, just one API into flexible power, multiple routes to market. But I do think there are some questions that do still need to be answered, and that's what AIM and Vesper will be looking to look at. So if you go to the next slide. So we think a short trial, currently called AIM, which will focus on increased options for FSPs and routes to market, keeping it nice and simple as we've done with Intraflex. And this should enable, we hope, FSPs to stack revenues and just provide that simple route to market. But also, I think it's worth reinforcing the point where it may well be that we try to mimic the market as far as we can. And I'm interested in what people might think about that. So, things like penalties or what have you, should we mimic what it would look like? But then going back to capabilities, next slide, David. So Vesper will be more, or we're thinking will be more focused on our capabilities. So we'll build on the learning from EFS, so our back office systems, and it will look at things like that forecasting, but perhaps nearer to real time, but also reliability. So checking asset classes and seeing how reliable they are. And I think in a way, what the outcomes will be, it should help inform our procurement strategies, price discovery, and provide that improved visibility of FSPs to us. And then go to the next slide. And ultimately what you could then see is a world where we've got new capabilities contained within Vesper that would then push these kind of messages out to flexible power and then out to the market. And this would then just be through some open standard and APIs. And again, we're interested in your views on it. And then finally for me, last slide, David, if you want to find any more out about these projects, or if you just want to talk about participating, there's our email address. So that concludes this session. I've tried to keep it as near to 11:30 as I possibly could. We just have a couple more poll questions for everybody. So poll question 3, I think, is feedback on AIM and Vesper. Fire it away, David. And I appreciate it's very high level, everybody, but fire away. And we're not mad, Gary. Just give it a couple more seconds. Okay, that's fine. We seem to have stopped on. That's fine. That's fine. But you know, that seems to suggest that we're on the right track. So, are there any final questions that we've got? Hang on. Can't. Don't think we've got any final questions. I think Gary seems to have taken most of them. No, I can't see any further questions. That's fine. Yeah, no, I can't see any further questions, but if there are any that we find later, we'll come back to you with, because I'm conscious of time. So I think there's one final poll. So if you just do the final question, David, and everybody can have the rest of their day. So overall, how would you rate today's event? If you could vote now. Brilliant. We seem to have done something right, which is good news. Good news. Excellent. Thank you for that. And thank you everybody for attending today. Just finally, what I would just like to do is I'd just like to reinforce the message. If you do want to get in touch about what we're doing around AIM and Vespa in particular, or if there's any questions that really are pressing and you want to ask us, then feel free to use the email address that was displayed earlier. And thank you once again. Thanks very much. We will share the slides, by the way, everyone.